While the paper gold price in US dollars continues to be manipulated and held in check in a trading range, Chinese gold buyers are taking advantage of the paper price not doing anything and are accumulating massive amounts of physical gold. We just got another update on Chinese physical gold demand. Now, this story was in China Daily, which is considered a propaganda newspaper. However, the sources being quoted are from the China Gold Association and also a Bloomberg analyst, a mining and metals analyst at Bloomberg Intelligence, Zhu Yi. I don't know why this story was not covered in the Western media, but it should be, because it's citing good sources with the China Gold Association and then also a Bloomberg analyst. There is big spikes now in Chinese gold demand. China's gold consumption surged 48.44% year over year, so over a 48% increase in just the last year, of 813.59 tons during the first 3 quarters of this year. And then that number is also an increase compared to the pre-pandemic Chinese gold demand levels. So Chinese gold demand is now higher than it was back in 2019, and it was robust back then. So this shows that the Chinese buyer is hedging with gold. Gold is being bought as a safe haven and as an insurance policy to a lot of the economic problems going on in China, as we see more and more headlines with their problems with their real estate development companies, whether or not they're going to get bailouts, bond payments are being postponed, they're renegotiating them, etc. So the story is quoting from the China Gold Association and also a Bloomberg intelligence analyst. And China's gold demand for jewelry is still increasing. It increased 54% year on year. So in the last month or so, I put out another video with another gold analyst who was Chinese, and he was saying that Chinese gold jewelry demand was going to increase by 43%, and now this number shows that it actually increased by more than that. It increased by 54%. There's an analyst on Twitter named Samson Lee. He's posting videos of long lines to buy physical gold in many different Chinese cities. He's posted a number of videos over the last month or two showing very long lines of Chinese citizens in shopping malls and gold jewelry stores in major Chinese cities to buy physical gold. So physical gold is being bought. Unfortunately, it has not affected the paper price of gold in US dollars, but if Chinese gold demand continues to increase like this, it eventually will. And gold miners are not going to bring on new gold mining supply unless the gold price rises. There are not a lot of economic gold mines at the current price, especially with energy prices rising, especially with the cost to build a new gold mine potentially rising 25% or more in the last 12 to 18 months. The economic feasibility studies for a lot of these mining companies to build new mines are coming out lately, and they're showing big cost increases to build a new mine. It is much cheaper for you, the listener, to go and buy physical gold as an insurance and a hedge, or for a gold mining company to go and buy a producing gold miner, because a lot of producing gold mines are not selling at big premiums right now. So mergers and acquisitions will pick up, but it's a buyer's market. So don't expect your junior miner, don't expect to get 10x or 20x gains on your junior miner unless the gold price goes way above $2,000 an ounce. The longer the gold price is held in check, the more likely that a lot of these really good gold mining assets are going to be bought for pennies on the dollar in this buyer's market. You know it's a buyer's market, and you know it's not good for juniors when a company like Kirkland Lake Gold, which has 2 of the best producing mines with the best profit margins and free cash flow, their mines did not sell for big premiums, which was very shocking. Finally, if you like content like this and want to help keep content like this free so it doesn't all end up behind a paywall, or you want far more in-depth content research, financial education, and analysis than I provide in these short little free videos, there are now over 180 articles, charts, and audio podcasts behind the paywall, all for the cost of a Starbucks cup of coffee, only $5 a month. And just in the last 18 or so weeks, there are 30 new articles out on gold mining, silver mining, precious metal, royalty, and streaming companies, and uranium. So if I could wrap up this short little video very quickly, the Western media for some reason has not put out articles like this in the last couple weeks showing Chinese gold demand increasing. I think the World Gold Council put out something, but it was not a big headline. I didn't see it in Kitco today. I didn't see a source cited to it on Twitter from the Gold Telegram, which normally posts stories like this. They did not post a link to a story like this. But shockingly, China Daily had this story. However, even though it is China Daily and that is somewhat suspect, the sources being quoted in this article are actually legit. The China Gold Association is being quoted, their data, and then also a Bloomberg intelligence analyst for mining in the metal sector, Zhu Yi. A senior analyst for metals and mining at Bloomberg Intelligence is being quoted with the research here. So this is not just propaganda. And then on top of that, there's a lot of anecdotal data that Chinese gold demand is picking up very, very rapidly. There's a lot of factors for this. I've made videos over the last 4 to 6 weeks detailing a lot of the different factors, but the bottom line is we're getting more and more data coming out showing that Chinese gold demand is up a lot. It's up 48% in the last year, and it's now even over 5%, almost 6% above the 2019 pre-pandemic levels.